All right, good afternoon. Welcome to the weekly take on the market. Today is Friday, July 26th. It's about 2:45 Pacific time, so the market is closed. I will be your host. My name is Scott St. Clair. I'm the manager of the Premium Product Group here at Investors Business Daily. Please take a moment to read the disclaimer. It's important. I'm not licensed. I can't tell you what to buy, sell, hold, how many stocks you should own, how much of each stock. And nobody at IBD that I'm aware of is licensed. Uh, Great. Okay. So market thoughts, industry groups, stocks to watch, quote of the week. We'll do the typical step-by-step process. I did use this chart last week, but this one looks even cleaner. So I thought I better use it again. I really like how clean this one is, because it's the other one had more possibilities, but obviously now we're more aware of the setup, so to speak. So in this regard, we're in this kind of yellow zone, and right or wrong, at least so far, the market's kind of following this process. So if that's how it plays out, we should have a pullback into late October, which is kind of typical. It's not all that unusual for the markets to bottom in October. If you've seen this seasonality charts that I've used, September actually is the only negative month historically, barely negative for equities. October you would think would be the one, but normally what would happen is the market would bottom in October, but the rough part is in September. So I'm not going to put my chips down and just say this is how it has to play out, but I'm aware, and the way the market is acting, it's acting kind of in this setup. So it's food for thought as far as that. I think that the bottom line is volatility, I should say, is going to increase. I think what we're seeing now is going to become more normal. We've gone a long, long way with very little uh, volatility. So maybe it's just going to ramp up. Do I have anything else? Yeah. Okay. So US versus global, extremely, extremely stretched, like a 3 standard deviation. The problem with these charts is when if you stopped at 1.8 standard deviation, you had a massive underperformance for 4 or 5 years. But if it starts to turn like it did in the 65, 70-ish area, you could see how it started to turn and came down. It could come down for a long time and a long way. And the 2000 peak, it might not seem like a lot, but that's like a 5-year window where the rotation occurred. So these types of rotations, if they occur, they're monumental shifts. They can take a long time to play out. So maybe this is just the beginning of something like this. It's very unusual the way the market's acting. It hasn't acted like this in a long, long time. You have to go back to, at least in my trading lifetime, the 2000 top, where value started to outperform technology, and what we're seeing now, where small caps are starting to perform, at least in the smallest window that we have so far. And the Dow had a really good day today, Friday. The Nasdaq, I think it was up, but up barely, right? I think it was up maybe 0.75%. We'll pull it up. So you have to be willing to be open to change. What most people get hurt in the market is, what does Mark Twain say? It's not what you know, it's what you think you know that just ain't true that hurts you. So if you put your flag in the ground and say, Nvidia is the greatest stock company ever, I'm going to hold it regardless. And then the world changes. Maybe Amazon comes out with their own chips. Maybe Meta does. Maybe Microsoft does. I don't know. I'm not. It's maybe that could happen. I know there's a lot of talk about these new chips that Nvidia is coming out with, how powerful they're going to be. And if that's the case, the stock will will perform. It'll start to go up, but anything can happen. And what I'm trying to say is be aware, be cognizant that markets can change. The leaders today are not going to be the leaders 10 years from now. They might not even be the leaders 18 months from now. If you look at like the best performing stocks from decade to decade, very rarely will you see the same name on that list. I've seen that list before. I wish I had it handy. I'd pull it up, but once in a while you might see a GE on there twice, or a Philip Morris or something like that. But almost always they're different types of names. And so that you have to be open to something changing. All right, so let's pull up the indexes. So here's the NASDAQ, and I guess today it was up 0.8%. Let me refresh this. 1%. So with the last time I looked at it, it was 0.8. So maybe there's a little rally at the end of the day. So up 1% today, but finally below the moving average. And if it can stay below the moving average, then that's where you'll get kind of this trepidation. So a couple times like this looked like it could have been something, and then it reverted fairly quickly. So if this is something, it'll stay below this moving average. So as long as you're below this, you probably want to be less offensive. It doesn't mean you have to be defensive, but less offensive. Now, for me, I'm going to be super less offensive because of the way I trade. And this doesn't look like a great setup to me. It feels like something might be wrong in that area. I know last week I said I felt like there was a 20% chance that we go into a bear market. I would have to increase those odds now. And I would say we're 40%, maybe more. I don't know, but it could be just a switch where a NASDAQ correction / bear market and everything else holds up. It's hard for me to see that happening because historically it's very rare for that to happen, but not impossible. So the 2000 peak, that kind of what happened, but eventually, the S&P held up and held up. Let's look at that. And I sort of hate comparing it to 2000 because it's like the obvious one. So since it's so obvious, I don't think it's going to play out that way. But it just sure feels and resembles very much. It has a lot of characteristics of that. So here's the NASDAQ. Get a bad break, tries to rally, bad break, tries to rally, bad break. And this is 3 months after. Let's go out till December. And you could see it had a few rallies here that looked like everything was going to be okay. And if I go to the weekly, like it jumped above the 10-week, and I'd probably be long into that because it looks like the market is fine. And then it jumped above the moving averages. You see how it cannot live above the moving averages a week or two tops, and then it's back below them. But if you look at the S&P, so here's where the NASDAQ topped, and then it held up really, really well, practically within new high right there. And then it just couldn't take the pain anymore. Was IWM around back then? So you could see a bad break almost to new highs, and then really bad break, just like the NASDAQ. So that's kind of what it feels like at this point for me. We'll have to see how it continues. In the end, I'm managing my risk day by day, week by week, but I like to think out loud about these things. So the NASDAQ, which was the best, now seems like the worst, and the worst for the longest time, IWM, now seems like the best. And maybe it's coming out of a really long base. So it could possibly lead. It is leading in the short term. Look at the RS line right here. And today it was up more than the NASDAQ, which is very unusual. It's very rarely has it been up more than the NASDAQ throughout this whole run right here. The diamonds or the Dow, so barely off the highs and had a really good day today, up more than the NASDAQ, unusual. And then the S&P, I don't know what it was up today, 1.11%, basically NASDAQ like, but it's holding up better. It's above the moving average. That didn't run as much, so it didn't pull back as much so far. And then last but not least, I very rarely look at this. I should look at it more, to be honest with you. And I heard Mark Minervini talking about it on the podcast, but the IBD 50 index, you can see how the RS rating is really losing its luster. Now, not the 50. The 50 is an ETF, and that's let me make sure I get this right. Equally weighted, maybe, whereas the IBD 50 is market cap weighted. I think something of that nature. So they're not exactly apples to apples. And I think the 50 will change names once a week or something, whereas the IBD 50 can change every day as needed. So the 0 IBD 5 is true to that index. You can see it's losing relative strength. The weekly, it's right on the 40-week moving average. Last time it broke below the 40-week moving average, besides the COVID one, was the last bear market that we had. So if it starts to live below that, I used to look at the mutual fund index a lot too, 0 MUTI. I remember that used to be a favorite of Bill's. And I one time in the paper, like they drew a cup with handle on the IBD 50 index, something like this. And you know, it was kind of a signal that he was bullish. I don't remember if it was a daily or a weekly, probably a weekly. So this can give you kind of a clue as well. So, but let me get a best fit. You can see like pretty bad week and then 0 follow through so far, closing on the lows. So these are other indexes you can use to try to put the whole pie together as if you need to. I think as we sit here, the key is the NASDAQ. Can it hold up? Will it be able to shake this off so far? I guess even this Fang Yu would be something I would follow and definitely follow. I am short this. It's a 3 times ETF, so keep that in mind. It's going to exaggerate the move both ways, but breaking the 10-week line and already 31% off the high and just 3 bad weeks looks, you know, upper trend line. I mean, that would be way too steep. So I prefer that one. Looks like it broke that a lot like NVIDIA did. We can talk about that when we get there. But the last time it did that, if I were to go like to something like this, you see how it broke down, try to rally, broke down, and then try to rally and actually went into new highs. So if you were bearish, it just would have just wore you out and then collapsed, went from 400 down to 40 or something like that. So it won't be easy if it were to play out. It never is, especially when it's a triple leverage. So it's exaggerating every day the moves. But this is something that I would watch if I were you as far as feedback from the market. All right. Well, I guess we might as well FBTC. So that's going to be Bitcoin. I don't know where it would follow under into stocks or into the market section. So very interesting to me. So this could be construed as a double bottom. If I look at the daily, this looks very cup with handle like, and that looks like a potential pivot right there. Or if you use a double bottom, the pivot's a little higher like that. And I have not bought this. I've been tempted to buy this. I almost bought it today. I just can't seem to pull the trigger. I just can't seem to get behind the Bitcoin bandwagon, but I'm open to it, and the setup is bullish. So I have to respect that, I think is the right word. The price action looks very bullish with this setup. So I don't know what that means for the market, but that's another area. Gold's just, it's just too tough. I've kind of, I don't want to say I've given up on gold, but I've very little zest for gold. Tries to break out, pulls back and fails. So far, that's kind of the way it does its thing. IWM SPY. Okay, so that was all the indexes. Let's go to the industry groups. So number one, oil and gas royalty trust still. Two, medical long-term care improved a little bit. Steel specialty lost a little bit. Telecom infrastructure moved up a little bit. Software database, gold and silver. I mean, the gold stocks are acting okay. AEM looks okay, but I'm always wary of when they look good. They tend not to stay in that sweet spot. Look at supermarkets, 131 3 months ago, 12.8. Food, meat products, media, books, media, newspapers, not exactly growthy. Semiconductors, hospitals. There's a new hospital one. Is Ardent was the ticker that went public. I think it was a IPO versus a spinoff. How about banks? So 88, 42, 18. Banks Southeast. I don't know what the difference would be between Banks Southeast and Banks Midwest and Banks Northeast. It'd all be kind of similar, I would guess. So I don't see a whole lot of signal in the industry groups as we sit here. Maybe they moved a little bit more defensive in the last week, but you should do this. And then if there's like a group like, oh, I've never looked at oil and gas royalty trust stocks, you should look at them. You should open that up. Let me turn off my camera so you can see. Open up the related information panel, choose stocks and group. These are all the stocks by market cap. Click this button down here, show all component data, and these will give you all the stocks in the group sorted by EPS and RS combined. So Texas Pacific Land is number one because 90 and 94 is the largest number. The next largest would be Granite Ridge Resources, etc. And there's only 15 stocks in here, but a lot of time when I do this exercise, I might look at 10 to 20% of the group. So if there's 15 stocks, I'm going to look at 3, 4, something like that. If you can't find anything to buy in the first 3 or 4, or the first 10, 15, 20% of the group, not a whole lot in the rest of the group based on my experience. All right, so let's jump to the stocks. Let's go with NVIDIA. I always want to look at that one. No, I am not short. I had to think for a second. I tried to short it this morning. It opened at 116 and I didn't get a fill. It's very frustrating. I think my price was like 116.40 or something because that's where it was indicated in the pre-market. I shouldn't have, again, market order, but let's see here. Uh, 116.58 was the high today. I don't know. I must have missed by pennies, which is so frustrating. But it just looks tired. It's not the same stock. Up 0.5%. Go to the weekly. You see this trend line that I had drawn was triggered almost perfectly. Such a really good offensive sell signal. The upper channel line had been very difficult to sell it because right into the potential 10-for-1 split and all that. But now this is the leading stock. So if this is the top, it ain't going to be easy. They are going to test you. Like, it's going to be something like that if this is the top. So, but I like to watch the stock because it's the most important stock in the market, obviously. Now, food for thought. Somebody, I don't know if this person will watch this video, but just in case. So the RS rating is 98. What does that mean? The RS rating is a selection tool. I want to fish in a pond of high RS stocks. It's not a timing tool. I would never use the RS rating to make a decision. Oh, I'm going to buy that stock. The delta on the RS is important. And the way to find that is in the technical tab here. And you can see 1 week ago, the RS was 98. 4 weeks ago, it was 99, and on and on and on. Now, the 3-month RS is 64. Easily the worst I've ever seen it in a long, long time. The 6-month is still okay. It's 92. But the 3-month is 64. So in the last 3 months, NVIDIA has only outperformed 65% of the database. Not all that exciting. And how can it be a 98 if it's corrected 20%? Well, it's relative strength. So a lot of other stocks have corrected, of course. But imagine nothing else corrected. How could this be 98s? Going back 12 months, it's not perfectly going back. It's using a combination of the 3-month rating, the 6-month rating, and the 12-month rating. A combination of all those is to make up that number. But forget that NVIDIA was at 140. It's currently 113. In the last 12 months, let's go back. Where's September? Let's just go like right here. In the last 12 months, may have not drawn that exactly right, but you get the idea. It's close. In the last 12 months, NVIDIA's gone from 50 to 113. Forget where it was. Pretend it went to 200. It wouldn't matter. It's gone from 50 to 113. It's more than doubled. What do you think that would put it in the database of stocks in our database? How many stocks in our database have more than doubled in that time frame? So that's why the RS rating is so high. And it might stay high for a long, long time. That's why it's important to look at those 3 and 6 month ratings, because you'll see deterioration much sooner in those ratings and or the relative strength line. And it works the other way. I might buy a stock with a 70 on here, but it's a 98 and a 94 in the 3 and the 6 month rating. So the delta that is going to be more important to me than the overall number. Now the RS line, I think can be used a little bit more clearly. So the stock, in hindsight, made a high here, and the RS line made a high there. You can see it ran up, didn't quite make a new high, but if it had, the RS line was made a lower low, and then it undercut. So this is a little tricky. You don't want to do this, but I will do this sometimes. So when it undercuts this low here, like right there. Okay, so the stock is, let's say, 126 at that moment. But the last time the RS line was that low, the stock was 124. So it's telling you that the market ever so slightly is holding this stock up a little bit. I've seen it a lot worse in situations where the RS line, it was like 100 and the stock was like 117, and it was like I use that kind of signal to make a decision. Okay, NVIDIA. Tesla. I am short Tesla again. How am I short it? With TSLL, the long one, the double long ones. I shorted that on the earnings release, after the earnings release. Keep that in mind. So I'm up a tiny, tiny bit. And this is a double long. I've explained 100 times why I prefer to be short the double longs than long them, because of the optionality that bleeds. So Tesla, you've got all these ants really strong. It's coming in the moving average. I'm torn. The narrative, the story, Tesla, I just can't help myself with the fact that as a car company, it's it's got a lot lower to go, in my humble opinion. Now, maybe I'm wrong. Maybe it's not just a car company. And I know a lot of people think it's a robotics company and a space company and an energy company. And if I'm wrong, what will happen? I'll get stopped out. And it is what it is. I'm okay with that. I'm fine with that. But this looks like it's losing momentum a little bit. Not totally broken, admittedly, but losing momentum. Let's look at Meta. So I don't have the pattern rec on. Broke out, and so far it's been a late stage base failure. We'll see, but this looks broken to me. AEM. So still holding the pivot, but this is what's so frustrating. Up 3%. I think at the highest point it was up maybe 8 or 9%. Not a whole lot more, but they tend to do this. They tend to come back and give back their gains. There's a bunch of banks that I kind of missed, like CCB broke out. Oh well, this is finance consumer loans, but like I wish I could, like I just kind of come across these banks in my weekend routine, and the patterns look so good, but I just don't. They just don't ever really show up because the RS is always kind of low when they finally break out. But regional banks, I guess what you could do is just go back to the industry groups. Let's go to that bank group, Bank Southeast. Let's just look at see, like here, that in hindsight, and when I see that, like, where am I? That is so viable. Well, they're just not on my radar because of that of the type of stocks that they are. Show all component data. So let's look at some of these stocks. Yeah, I don't know if I'd buy that one. But this is probably viable, or was. OFG, but look at here, it trades 250,000 shares, but nice breakout. FCNCA, very liquid, 85,000. Well, I should say dollar wise liquid. Nice breakout of 17% 9 days. Home Trust, 17% 20. Where am I? I mean, it's illiquid. It's not going to show up on my radar. So there's a lot of that going on in the banks. Whether you pass on them or not, it's up to you. Dexcom. This is a really good one to study. Hopefully none of you are stuck in it, but this stock was a great leader in the 2020 COVID, and it had a little run, and then it builds this really massive cup with handle. These tend to fail unless the market is correcting. Why does it need a 46% base? So it breaks out, fails, stop loss protects you. I really, really hope nobody is in this one, at least not at that price. If you're in it down there, I mean, so be it. I would never be, but I'm also never in the Apples and the Googles of the world either. So, but this, just you can see how it just deteriorated. Let's look at the technical panel. So 1 year ago, the RS was 86. Then 3 months, it was 85. Then 4 weeks goes 28. Then 1 week goes 20. Currently, it's 19. Look at these short-term ratings, just abysmal. Even if they were 3 times better before the gap down, this stock was screaming, I'm going to avoid. I actually thought it was a short, but I've thought that with the way that the Lillies have been and the NVOs have been acting. So when these were breaking out, I was like, well, the Dexcoms of the world are they're shorts because it seems like there's might be a better solution. And I didn't even dig into the report or anything, but it takes a lot longer for it to show up. But the main thing is hopefully you don't get stuck in something like this, down 40% in 1 day. Your rules should keep you away from stuff like that. That hospital that I was talking about, ARDT, you can see it triggered my alert for half a minute. It's really, really short base, new issue, priced at 16, a tiny bit higher. But medical hospitals, see, that's a bit of a defensive group. All right, so let's jump to the quote of the week. John Burbank, the founder of Passport Capital. I don't know why he kind of came on my radar again, but somebody, I think it was a Substack that I get. The guy had worked for Passport Capital, and he was talking about his experience there, and it was a very good read. I liked it. But what John Burbank, who's the founder of Passport Capital, said, essentially, people look backwards and extrapolate forward, but the world moves forward, the world progresses. He's famous for having caught like the Chinese equities in the early aughts, 2001, 2002, 2005, 2006. Not sure exactly when. Indian equities, when everyone was looking one way, he was looking another. And this is very important for like where we are now, right? So people are looking backwards. They're looking backwards. Meta, Nvidia, Amazon, Google, Apple, these are all the leaders, Tesla. And the world is moving forward. It's looking for the next thing. Now, they might be the next thing for a while. It's possible. Apple's done a great job of being the next thing over and over on Google. And so it's possible, but you need to be open to the fact that there will be new stuff, new names, new leadership, stuff that you're very unfamiliar with, and just keep doing your work. Keep screening, keep scanning, keep observing, keep reading. I find some ideas just from reading stuff, listening to podcasts, and then I try to put the story together with the chart. I mean, I like a good chart, so you can tell me all day that XYZ is a great company, but it better have a good chart. That's important to me, or at least something where I can buy to manage my risk. So that should do it for this week. Email, contact phone number for us. Next week we have Arnie and Harold will do their stay in step in the market. So I'll have next Friday off. So I'll be back to you guys in a couple of weeks. Have a great weekend. Thank you, everybody.